What's going on, guys? Gabe here. Now, I know a lot of you are reading the title and you're trying to figure out, you're waiting for me to make this point about Hedgies and Apes being besties. And you probably think I've lost my mind. But before we get into that, I want to cement this. And it's an important question. And that question is really simply, how do I make a lot of money? Ask yourself this question over and over because, like the rest of us who own 88.5% of AMC, we are holding because holding and buying the dip simply answers that all-important question, right? How do I make a lot of money? So when I talk about apes and hedgies being besties, well, we're going to make sense of this in a second. Okay, now I'm not going to get into the exotics of the squeeze, the situations such as naked shorts, FTDs, dark pools, or even possible share dilution, but I consider all of these to be accelerants to the clause, accelerants to the squeeze. And more on dilution in a second. I want to get into the mechanics in a layman's sense that answers that all-important question. How do I make money? Let's move the brain a little to grab a banana and leave the camera rolling while your wife is getting smashed by the pool boy, and make sure you get that uploaded on another site, not called YouTube. By the way, this is not financial advice, nor am I qualified to give financial advice, but we keep going back to that question. How do I make a lot of money? The hedgies are asking themselves the same question. How do I make a lot of money? To make a lot of money in this situation, we both have to simply hold. We're sitting here wondering why hedge funds aren't retreating, why short interest is going up. Like, whoa, wait, didn't you learn your lesson from Melvin after he lost his shirt? No, they learned a way to make a lot of money. And we're going to break this down. We've seen AMC stock price take a dip as of recent, all while shares on loan have increased 13.3% to nearly 136 million shares. The cost to borrow has increased to 2.74%, and utilization currently sits at 96.26. Now, let's explain that for a second, because 100% utilization means that all shares available to borrow have been lent. And I would think that's cool, right? That's what we want to see, for the squeeze. It's part of the makeup of the squeeze. But yet, why are the hedgies doing it? And I hope now you're starting to catch my drift. The market is not what it once was, and it's literally having a menstrual cycle every other day. As a hedgie, I'm thinking just like the apes. So AMC has the makings to be the mother of all squeezes, right? As a hedgie, I'm thinking, hey, let's help it along. Let's make sense of the money because we all want to make a lot of money. This is why we're buying, we're holding, we're going all in, we're buying the ask, we're doing all that crazy nonsense. We all want to make a lot of money. Now, to further illustrate this, I'm not happy about $2, $3 gains, right? We're looking for AMC 1,000, 2,000, 3,000, 4,000, 10,000, right? We are looking for that. And in order for that to happen, we really need to simplify all of this in a vacuum. And you're going to further see how hedgies are like the Skeletor to our He-Man, the Joker to our Batman. So let's make sense of this. The standard margin requirement is 150%, which means that a hedgie will have to come up with 50% of the proceeds that would accrue from shorting AMC. So if you want to short 1 million shares of AMC stock trading at $10, you have to come up with $5 million as margin deposit. And once you come up with that deposit, you would then have the $10 million from the short sale of the 1 million shares, right? That's how they will give you that money. So AMC goes down $1, gross profit is $1 million cool dollars. If it goes down $2, gross profit is $2 million. AMC stock loan fees currently sit at 2.74%, which means that annualized costs would be $274,000. We divide that by 360 days, not 365, and you get a daily value of $766. The interest rate's not killing me. It's not destroying me. In fact, I'm still in profit. I'm making money, right? We as apes are buying the dip and holding. Hedge funds are shorting the stock and making sure that the price goes down enough to justify, one, the short squeeze, two, that they in fact make some money to cover the interest of the shares that they borrowed. All right, you're following along? Good. Now the price can hold at $7 for nearly a year, and the hedgies are still making ridiculous money, right? I mean, no, wrong. Us apes like to say, why settle for cents when we're talking about Lambos and vacation homes on the moon? Hedgies get this point. These guys know money. They get this point, right? So utilization keeps going up, and currently it's up 8.82% from 7 days ago. Yeah, the hedgies get this. They have to do their part of the squeeze, right? Then we apes keep buying to fulfill our end of what is seemingly the squeeze obligation. Think about this. We're buying because this is seemingly the squeeze obligation. After all, we are all in this way too deep, and the only way to come out alive and filthy rich for both the apes and the hedgies is to squeeze. So then it happens. The squeeze commences. Now, the hedgie who went short and who was holding their short position for so long, they really didn't sacrifice much, right? But they helped to catalyze the squeeze. Now, they have to secure a long position, buy back shares, or even better, weigh out the money call options. Now, AMC smashes $100 a share. Hedgie's happy because they went long and turned a 10 million into 100 million. $200 a share, and hedgies are happy because they turned 10 million into 200 million. And all that simply by doing their part by shorting the stock and making sure the squeeze prophecy actually happens. Now, you're saying to yourself, what about share dilution? Let's say, theoretically, AMC goes down further, just before the mother of all squeezes. AMC CEO Adam Aron now has a weak dilution case. You see, why dilute 500 million shares to bring stock prices down to, let's say, $1? And weaken their leverage when they begin negotiating with their creditors and with their landlords? I mean, we are effectively saying that AMC should pass the buck and place the risk on the landlords. And again, if AMC stock is $1, well, yeah, this is not a healthy situation for AMC. Surely we would like to see a squeeze. Then AMC has a little more leverage in their negotiations. But ladies and gentlemen, I really think this isn't a war, apes versus hedgies. I think the guys at the hedge funds with all their PhDs and all their smart guys and all their guys who've done this before, all their guys who've seen the example made out of GameStop, I think the smart money is on the squeeze, and they're saying these apes aren't leaving, and they're saying we're not fucking leaving. We're all in this to make money. Now, hedgies make their money going short, but we seem to forget that they also make their money going long. So there are a lot of smart guys over there at the hedge funds who are saying, okay, listen, let's not overextend ourselves like Melvin did with GameStop. But if we can all collaboratively do our part, just like the apes are doing our part, the squeeze is inevitable. This is why we're calling this the mother of all squeezes. Now, can anybody outright say this? No, this is market manipulation. The SEC would clamp down on everybody. And mind you, this is just a theory of mine. Now, AMC dropped, and guess what? I bought some more. You bought some more. This is all part of the mechanics, right? It's the peanut butter. It's the jelly. It's the Batman. It's the Robin. It's the Decepticons versus the Autobots. And we all want the same thing. Just more attendees. I mean, after all, Who doesn't? This is Gabe with ReviewDork. I'm signing out. Peace.